Well, there is need for Kenya to urgently fix supply chain inefficiencies to align operations with sustainability-driven investment. This results in billions of shillings being lost through opaque procurement. The House of Procurement Group CEO, Bernard Odote, joins us for tips on what institutions should do to enhance procurement transparency.
Hello there and a very good evening. Thank you so much for joining us. My name is Trevor Ngendo. So Kenya's economy runs on supply chains, be it from SMEs seeking financing solutions to government management of procurement and to the global shift demanding sustainable and competitive trade. Today, we're joined by Mr. Bernard Odote, the Group CEO of the Odote Group, and the House of Procurement as well, who will be shedding us more light on how procurement, financing, and supply chain innovation can transform Kenya's economy. Mr. Bernard Odote, thank you so much for joining us. Maybe you could begin by telling us, before we dive into specifics, maybe you can tell us about your big picture vision of how procurement and supply chain can transform Kenya's economy.
Thank you, Trevor, and thank you very much for visiting us here at the House of Procurement. Much appreciated. The economy runs on the supply chain, and the economy is a summation of transactions. You are either buying for cash, buying for credit, or buying for instruments. A totalization of those transactions is what makes an economy. The economy requires a physical flow of goods and a financial flow. That's very critical on how an economy can thrive. It means that we must get our supply chain right, both in terms of localizing, if we can produce much more locally, in terms of spending effectively for government, doing much more with the same or doing much more with less to ensure that we impact more. And we should be able to do as much cost-effective sourcing, spending as less as possible so that we can spend more to offer more services. So the supply chain and procurement is the heart of the economy. If you don't have logistics, if you don't have flow of goods, if you cannot produce them, if you cannot pay for them, you don't have an economy.
All right, so Kenya's economy, the SME sector is the backbone of the Kenya's economy, you'd say that. Yet many of them collapse because of under cash flow gaps. So what's an alternative model that can be adopted to help them scale?
I think running a business is not easy, and for SMEs it's even harder. And sometimes the cash flow is a result of many things. Maybe it's delayed payment, for example, pending bills by government. Maybe they supplied a corporate that has also gone under, or they paid in advance to a supplier in China and it was never, the goods were never delivered, or they costed wrongly. So it's a combination of many factors, including not being able to get financing from the traditional financial institutions. That makes them find it very difficult to thrive and do business. There are many ways to resolve that, but most importantly, if I was advised SMEs is to focus on demand generation. Let's make sure we have enough market, then capital will always follow demand, and then we see how to structure that capital in a way that they pay after they get paid. This would be an important way. But also for SMEs is also to look at who we trade with, how we issue credit. I encourage SMEs not to give anybody credit, go for cash payment as much as you can. And even for big corporates giving SMEs business, pay them as early as possible. And for government, there's a preferred payment bill somewhere that is not an act. If we can get that agro for suppliers paid in 21 days, you'll see a very big impact.
How scalable is this kind of a model?
It's very scalable because an SME it's almost everybody doing business with you. It's almost everybody in the next shop, in the next corner, selling stationery, almost everybody. And for corporations or for banks that look at if a corporate is making 500 million and above, if you look at 500 million and below, it's almost the whole country is in there. So it's very scalable. It is the economy. It is what people livelihoods depend on.
What are some of the risks that you face, and how can you de-risk some of these businesses?
The risk is always the receivable. I think for anybody or an SME or anybody structuring financing, receivable is the risk. I would like to support the SME, but I would like to know who is paying them. How are they getting paid? How are they collecting? So if it's an SME who is trading, in someone with an exhibition shop, electronic shop, hardware, they should do as much cash as possible. If anybody comes for credit, let them take a loan, come and pay the SME the hardware and get the goods. If the SME is supplying a corporate, we need to look at the risk, the payment risk, especially the historical payment risk of that corporate. A lot of payment is more behavioral than actually people having money or not. So the more receivables are held out for an SME, the more difficult it becomes. So once we are able to ring fence and de-risk the receivables, it's not so difficult to support the SMEs. And then the second risk is performance risk. When the SME gets the business, do they know where to get what they have been given? Do they know how to source? Do they know the logistics? If they're importing, do they know all those nuances? Will they order the right thing? Will they get the right Chinese supplier, for example? So if we can also de-risk performance and ensure the SME performs, and the receivable risk was also sorted, then you have magic happening for the SME sector.
If then corporates are to thrive in such kind of a model, then the government asset management and of course the procurement and asset use must also be transparent. So let's talk about that. So Kenya's public procurement is often characterized with wastage and of course lack of transparency and inefficiency as well. So under the House of Procurement, how are you able to unlock value from idle assets?
I think most procurements, public or private, have issues. It's money being spent, so there's interest. People are interested. The community where you operate are interested. The stakeholders are interested. Banks are interested to finance large corporates for their procurement. Insurance are interested. So there's always be people lobbying and haggling for business. So I don't think Kenyan public sector is such not transparent. There's a lot of transparency in how sourcing and procurement is done. I think the mistake that the public sector has done is these pending bills. I would say so far so good. Obviously there could be scandals here and there. There could be overpricing here and there. I think if we can get our pricing well, market intelligence, so that we know, I think with the establishment of this EGP platform, if we're able to almost real-time see pricing across the country and also do international benchmarking, to enable us know that nobody is overpricing a project, then we are okay in terms of transparency. There's a process in public procurement. It's very transparent how it is done. I think it's a matter of, is it value for money? Are we overpricing, over-budgeting for the project? In terms of asset disposal, I mean, you know that the government has a lot of land, idle buildings. You go to places, yellow equipment is parked, old factories. You've seen what has happened with the sugar factories. We need to be really serious on how we dispose or release the assets to get value. For example, the sugar factories, we really need to see them being revamped, investment happening in them, and them generating money to government. The Kenya Railways, Kenya Port, all these people have certain assets. They are state-owned enterprises that own luxury homes, high-value land, and you wonder what they're doing with them. I've given examples of universities who are in debt and they have assets worth over $1 billion and the debt is probably $100 million. So the logical thing to do is to sell those assets. Now there's a process now with the Public Procurement Regulatory Authority, with the disposal agents, licensed disposal agents, that their work is to ensure they dispose assets at the maximum value. And they don't get paid, they only get paid from the value they generate. So it means they go out there and make sure they get the best value for that asset. And we can sell those assets to over 150,000 buyers in the world, not only in Kenya, so that we increase the value and government can unlock over 5 trillion shillings on this.
So you've mentioned that, of course, there's a lot of vested interest when it comes to procurement and public procurement as well. So how do you look at this PPRA licensing model? How do you ensure credibility and accountability in the process?
So the public procurement agents are vetted. Is competitive, and we also issue professional indemnities. Some of us have issued indemnities up to 1 billion shillings. It means if I mess up, I have to pay 1 billion. And we don't get paid, and for example, for disposal until we have a credible, valuable outcome. It means we are there to ensure we get the best value or the best outcome. In terms of supporting procurement, where there's conflict where there's complexities, where they require, for example, where development partners require more quality or value for money, it's very easy to use a procurement expert, an agent, to manage the process for you so that you avoid issues of compliance, of value for money, of competitiveness. So it's one of the best things that the Public Procurement Regulatory Authority has done. And now combining with the tools and systems being implemented by the National Treasury, I think we are on the right path to ensure that even the smallest unit in the public institution, like schools, will be able to implement a compliant procurement process that is not only competitive, but also gives equal opportunity to the community around them.
Beyond financing and transparency, there is a bigger conversation about the next Africa, Kenya's position in Africa, and not just as a participant, but also being involved in the conversation and actually leading. And so where do you see our supply chains headed?
I think Kenya needs to first sort its local supply chain. For example, Kenya is importing a lot of agri-produce. And I'm always saying, if you're going to open a factory, you must also figure out how in the first 3 years, 50% of your raw materials come out locally. If it can be grown locally in Kenya, we must protect it. We must form policies that anything that we confirm our soil can grow. If the Ministry of Agriculture and the agronomists confirm our soil can grow soya, we should grow soya. We should grow crude palm oil, which is the second consumer of our forex. Wheat, we should grow it as much as possible. And we should put enforcement measures to force the people who are using these things to grow them locally. Multinational companies like Diageo, East African Breweries, we have an animal feed partner like D. Hughes, who are pushing to have local raw materials without any government enforcement or policy. But our own companies are heavily importing. So government must come in and say, how do we first localize our supply chain? What can be grown locally? What can be produced locally? We deal with that. How do we look at our logistics? The rail network is a big network. It's a very important network. From the SGR to the MGR, how do we improve this rail and educate people that are you actually going fast, save money on logistics? Secondly, reduce the number of vehicles on the road by half if you use rail. What about our airports? What about our ports? The supply chain in Kenya, and being that we are a coastal city, we are on the ocean, we have a port, is an opportunity to dominate not only Eastern Africa, but also to export to the rest of the world.
Great. But all of this is coming amid a digital revolution. Of course, like you've said, do you really need to go to Geneva to meet a client? Right? You can meet on a digital platform. What role do this kind of technology advancement and the revolution have to play in expanding the logistics hubs, especially for exports?
Maybe the digital platform sorted meetings, but you still want to look into someone's face. And this interview could still have happened virtually, but it's much better happening the way it is happening now. Goods have to move physically. I don't think they move through any other platform. The aircraft must carry the cargo, the rail must carry it, the ship must carry the cargo, or the truck must carry it. Yes, you will digitize that process so that you know where your goods are, which truck carried it, which airline carried it. You will digitize that process so that the person in Ivory Coast is able to trace this thing coming from Kenya, or even the person in Rwanda is able to see what is in a warehouse in Kenya that is for him, because we could do fulfillment centers here where we produce, keep, and fulfill from here to the region. So digital and digitization is important, but it only accelerates and enhances the physical and the financial. You must get the physical right. So it is important, but we must get our fundamentals right.
All right, let me take you back a little bit. You've mentioned about the common currency. I'd love to hear from you what you think about the adopting a common currency as an African continent.
So it's very important for us to look at how do we stabilize the fluctuation of currency, because you do $1 million, and if you look at money books of corporates operating in multi-countries, you see an FX loss. Sometimes a very big FX loss. So it must be resolved. And we cannot be trading in Africa in dollars. There are countries you go in Africa, they don't use their own currency, they use dollars. So we have to look at that. I leave that one for central bankers and presidents to deal with that.
All right, so ESG compliance is becoming a very big thing globally. I'd like you to talk about the ESG impact exchange. What opportunities are there, and how can you help? How does it help corporates or even SMEs to be able to compete internationally?
I think for us, ESG Impact Exchange is targeted to global corporations in the West and the GCC countries and even China who have targeted ESG goals and objectives, whether in aviation or in manufacturing or in oil and gas sectors or in technology, or in any other sector that has certain demands for ESG compliance, whether it's environmental, societal, or governance, that they really want to achieve. If you look at the whole world, the place to achieve those goals is Africa. If you looked at, you said Africa has the largest arable land, so if you needed to do anything green, the only place to do it is in Africa. We have the youngest population and the most unemployed. So the impact on socioeconomic impact on employment is only in Africa, and you have the labor there. If you look at green energy or renewable energy, we don't even have any energy as much. Most African countries are suffering from lack of electricity. So if you have to invest in energy, Africa has the gap. If you look at clean cooking, Africa has the gap. If you look at healthcare or logistics or movement of people, any ESG objective that you might have, there's a gap in Africa. That means Africa has a commercially viable ESG opportunities. Not only ESG for the sake of meeting goals, but it's commercially viable. If you invested in all these areas, there's a buyer.
As we bring this to a close, what would be your advice to businesses that are eyeing the global markets?
Africa is the future. Africa is where the demand is. Africa is where manufacturing will be. Every other country is growing older than Africa. We are the people who are seeking and yearning more, the opportunity to learn more. Everything we do here will leapfrog in technology. So there's opportunity to do much more in Africa. Local production for Africans themselves and for export, opportunity to invest in infrastructure from road and rail, the opportunity to connect the entire Africa continent. So I will encourage the global community to look at Africa keenly and come early, so that when you don't come when it's crowded. So come early so that you're not left behind. The Kenyan SMEs, I think for the businesses that are supporting SMEs, critical is to see how we support the SMEs perform and de-risk their receivables. So we have a program for pre-performance and post-performance capital. The SMEs must perform first before they're able to get paid, and when they perform, which we support, we're also able to support them to be paid early. But generally for the SMEs trading in the market, always trade in cash. Don't give credit, collect cash.
All right, thank you so much for your insights, Mr. Bane Odote. It's such a pleasure to have you with us. Thank you for granting us this opportunity.
Thank you, Trevor.
All right. And there you have it from Mr. Bane Odote. I've been talking to him. He is the Group CEO of the Odote Group and the House of Procurement. He has shed light on unlocking financing for SMEs, procurement reforming, and much more. And it's our hope and trust that you found value from this conversation. My name is Trevor Ngendo. Thank you so much for watching, and have a good evening.